Elon Musk considering banning Apple devices at his companies. And as well, we're seeing low confidence and the worst future outlook in decades for small businesses. That's coming up today on Business Matters. And good afternoon. Thank you very much for being here with me. I'm your host, Don Ma. S&P 500 and NASDAQ here ended in the green today while the Dow slipped a bit. So S&P 500 Technology Index was actually up sharply. And as well, Apple shares jumped to a record, giving the S&P 500 and NASDAQ their biggest boosts. So of course, investors now eagerly awaiting for consumer prices data coming tomorrow. We'll have coverage on that. And more importantly, a policy announcement from the US Central Bank. So a little bit more on the Apple stock here. It is up more than 7% today to reach a record high for the company. And this is coming just a day after unveiling new artificial intelligence features for its devices. Apple stocks may be soaring to record highs, but its products may have soured with Elon Musk. The billionaire businessman has threatened to ban iPhones and Macs and other devices at his companies. So Elon Musk is worried about securities issues that could arise with the new partnership between Apple and ChatGPT creator OpenAI. Now, in a post on X, Musk wrote that if Apple moves forward with its plans, it announced at its annual conference yesterday, Musk would then ban Apple devices at his companies. And there's a lot of them here. That could potentially include social media platform X, SpaceX, Tesla, and more. He added that visitors would have to check their Apple devices at the door. One Apple executive said that the use of AI will be done with privacy, quote, at the core of every system. Musk has a tense relationship with OpenAI. If you remember, he co-founded the company in 2015, but later sued it, saying that it had abandoned its original mission to develop AI for the good of humanity, not for profit. Musk also runs a rival firm called xAI now. A little bit more about Apple here. 4 more states joining a lawsuit against the company over antitrust concerns. And this is according to the Justice Department, which first filed the suit in March along with 15 states and DC. The suit claims that Apple is illegally monopolizing the smartphone market and using its market power to get more money. Bear with me here, it's a very long list. More money from consumers, developers, content creators, artists, publishers, small businesses, and as well as merchants. The DOJ is saying here that Apple makes much more profits from its smartphone than rivals. Officials also saying that Apple imposes hidden charges on its business partners and consumers end up paying for it. So of course, Apple here denies those allegations and is saying that it's going to ask the judge to throw the case out. Okay, as I mentioned in the beginning of the show, low optimism and the worst future outlook in decades for small businesses. And this is based on the findings by the National Federation of Independent Business. So its Small Business Optimism Index rose in May for the second consecutive month, but this is a big but here. This is the 29th straight month that the index was below the 50-year average. And on top of that, its uncertainty index rose to its highest reading since November 2020. So, owners once again named inflation, no surprise here, as their single most pressing issue in their operations. So in light of this report from the NFIB, I talked to a small business owner who recently actually testified in front of the House Small Business Committee about what's burdening owners. Now here's Carol Roth, former investment banker and author of the book, You Will Own Nothing. All right, Carol, thank you very much for your time today. So we had the small business sentiment report today. It did improve last month, but overall optimism still very much below the 50-year average, according to the NFIB. So let me just give you a quick number here. 1 out of 5 owners reported that inflation was their single most important problem. Now, tell us, what are you seeing as perhaps some of the obstacles that are facing small businesses?
Yeah, the small business report from NFIB was interesting. As you said, a little tick up in optimism, but we're not back to pre-pandemic levels. We're well below that. And I think that's the big issue. Small businesses are really feeling since 2020 that they have borne the brunt of every problem. Obviously, they were square in the middle of those mandates in terms of the shutdowns. And since then, they've been dealing with the after effects. You noted from NFIB, inflation. And we see this over and over again. I've seen it in reports, in surveys that we've conducted with our own small business community. You've seen it out of NFIB reports. You've seen it out of Alignable reports, that inflation really is the name of the game. It's harder for small businesses to pass on those price increases to consumers. They're dealing with higher prices and they're getting squeezed. On top of that, Don, another sort of long tail impact from the COVID mandate that is also impacted by inflation is labor. And not only is labor becoming more costly, but it's very difficult for small business owners to find and to retain quality workers. And so we're seeing that pop up over and over again. Perhaps unsurprising to you, it was unsurprising to me, government regulation and government burden also pops up as an issue, a big issue impacting small business, one that has been very frustrating. So unfortunately, too many concerns and not quite enough optimism.
All right, so I understand, Carol, that you're actually a small business owner yourself. So among the things that you mentioned, what would you say for you personally is weighing the most?
Yeah, I mean, I think that it is the inflation piece, certainly. And people say, well, inflation is coming down. Isn't that a good thing? But I always make the analogy to gaining weight, right? You have a bad year, you go to the doctor and you gain 10 pounds, and the doctor says, this is not good. You got to do something about it. Well, if I go back the next year and say, well, I only gained 4 pounds this year, doctor, they're not going to go, good job, Carol. You gained so much less than last year. And I feel like that's the issue for business. It is this cumulative impact. So in dealing with clients in terms of them making capital allocation decisions, growing their business, trying to bring on new clients, allocating money for operations and marketing, that really becomes the biggest issue.
Okay, so speaking of inflation, of course, we have to talk about the Federal Reserve. So, I mean, it's trying to tame inflation here by raising interest rates. How much do you think that has helped in terms of curbing cost increases?
I am very skeptical, and I've been very contrarian about this the entire time. I don't really think the Federal Reserve has had the right tools, and I don't think that them raising interest rates has had a material impact on curbing inflation. I think that the supply-demand shifts in the market has had a more material effect of the inflation change going down a little bit. I think the best thing that the Fed could do is to lower interest rates. That means we would be paying less in terms of financing our deficits and our debts. And that would be something that could actually help inflation over time instead of seeing that continue to spiral on the back of increasing deficits.
All right, many points mentioned here today. Let me just ask you one more thing here, Carol. Let's say you were in charge for a day. What would you do to improve small business optimism?
One day is probably not enough, but I would go crazy. And I think the number one thing I would do is I would remove the government barriers. We're seeing more and more regulation. As you know, I was in front of the House Small Business Committee about 5 weeks ago against the CTA BOI rule, which is a mass data collection rule against small business. I would try to get the government out of the way. It's not that small businesses need subsidies or this or that. They just need to be able to conduct business without the government interfering. We hear it over and over again from small business. So anything I could do to cut out that regulation, cut out those ridiculous barriers that are impeding the success of the backbone of the economy, that's how I would spend my day, Don.
All right, Carol, well said today. Thank you very much for your time.
Always a pleasure.
Okay, here's what else you need to know happening in the business world. Boeing sales continue to falter amid safety concerns and production issues with its commercial jets. The company reported only 4 new jet orders last month compared to 69 in the May of 2023. Now, all of the May orders were for the 787 Dreamliner. None were for the troubled 737 MAX, and that's the jet that had a door plug blowout in January on an Alaska Airlines flight, prompting numerous federal investigations. So far, Boeing orders are down 36% year to date. Deliveries was also in half compared to the same month last year. Boeing is also feeling the burn on Wall Street. Its shares are down about 30% so far this year. And moving on, will Elon Musk get paid? Shareholders will vote Thursday on whether to reinstate his $56 billion pay package. Here's the story.
Elon Musk's $56 billion pay package is at stake. Shareholders will vote Thursday on whether to approve it. Investors launched the plan in 2018, tying the $56 billion to Tesla's market cap, hitting $650 billion and other performance goals. Outside of this, Musk would get no salary.
It's the most radical compensation plan in history. Nobody's ever done it. But he literally gets nothing. And the other thing that's interesting is if he gets to, let's say, $99 billion, he gets nothing. If you get to the next one, if you get to $149 billion, you get nothing. If you get so. But it is truly eat what you kill.
CNBC's Andrew Ross Sorkin recently posted on X. Without the incentives, he could have easily stepped down as CEO. And then where would have Tesla been? Delaware judge Kathleen McCormick invalidated the package in February, saying it was unfair to shareholders. McCormick said at the time that shareholders were not fully informed when they created the package.
If the shareholders, however, agree upon the package and there's no dispute as to the fairness to them, then there shouldn't be an issue in the Delaware courts.
Attorney Katie Charleston says if the shareholders vote no on Thursday, then it's back to the drawing board. Shareholders may have to come up with a new compensation plan.
Really, the shareholders want Elon Musk and his interest in the company. He has been a person that has driven the innovation and the success of the company. And so they really want to have as much of his attention and involvement as possible.
Tesla says Elon delivered a total shareholder return of over 1,000% in under 6 years. It tells investors they need to vote now to protect both Tesla and their investments.
Now, let me tell you about one more thing before we go to break. United Auto Workers President Shawn Fain is under investigation. And this is according to a court filing. An independent federal monitor is looking into alleged acts of retaliation against other union leaders. So the document reveals complaints surrounding the UAW Secretary-Treasurer Margaret Mock and former leader of the union's Stellantis department, Rich Boyer. So in one case, Mock said that she faced retaliation for her refusal or perhaps reluctance to authorize certain expenditures for Fain's office, and this is according to the filing. The union is also being accused of uncooperative in the investigation. In a statement, Fain welcomed the investigation and added that taking the union in a new direction can rock the boat and upset some people. Okay, General Motors has cut its annual EV production forecast. It's also announced a new $6 billion share buyback plan. GM now sees its 2024 EV production to be as many as 250,000 units instead of 300,000, which is the earlier projection. GM shares had been under pressure last year as it dealt with a UAW labor strike and trouble with its self-driving vehicle unit. Now, no timeline, though, has been given for the new buyback program, and this comes as it reports stable prices and demand for gas engine vehicles. Plus, the Detroit automaker posted an upbeat first quarter and a raised annual forecast. The new buyback will follow a $10 billion share repurchase program. That one was announced in November and is expected to be completed by the end of the month. And on that note, time to take a break. And coming up after, the U.S. has barred more imports from China over the alleged use of forced Uyghur labor. And the average annual cost of owning and maintaining a single-family home in the U.S. soaring. You'll be surprised at just how much. This after the break. And welcome back. Thank you very much for staying with us here. Let's quickly go over some headlines today. A federal jury convicted President Biden's son, Hunter Biden, on all 3 felony gun charges he faced. The jury found him guilty of violating laws meant to prevent drug addicts from owning firearms. This marks the first time a president's immediate family member has been found guilty of a crime during their father's term in office. And some development in the case of former Theranos CEO Elizabeth Holmes. Her lawyers presented her appeal today before a California court. Holmes was originally sentenced to 11 years in prison for defrauding investors. She is seeking a new trial, arguing the judge made errors in several decisions during the proceedings. And Singapore Airlines is offering $10,000 to passengers who suffered minor injuries on a flight that encountered severe turbulence. All passenger tickets will be refunded. Anyone who suffered serious injuries can discuss an offer with the airline. As well, America's first next-generation nuclear facility has broken ground in Wyoming. Bill Gates and his energy company have started construction in Kemmerer on the first-ever natrium plant. Gates says this will be the most advanced nuclear facility on Earth. And let's talk about some China-related stories now. The U.S. has barred more imports from China over the alleged use of forced Uyghur labor. This is according to the Department of Homeland Security. Now, these Chinese companies, they include a shoe manufacturer, an aluminum maker, and a food processor. They have been added to a list called the Uyghur Forced Labor Prevention Act Entity List. And by the way, scores of companies have been added to this list. This list restricts the import of goods tied to what the U.S. government considers an ongoing genocide of minorities in China's Western Xinjiang region. And Amsterdam plans to remove surveillance cameras made by Chinese companies. It's citing concerns over potential espionage activities and violation of human rights. So, up to 1,280 China-made surveillance installations will be replaced over 5 years. And as well, this is according to the municipality in a letter released last night. There's growing concern, in fact, that surveillance apparatus made by Chinese firms could transmit images to either the manufacturer or the CCP. Plus, U.S. officials have accused Chinese companies like Hikvision and Zhejiang Dahua of participating in human rights abuses against China's Uyghur minority. And we're seeing another lawsuit in the horrific attack that left 19 students and 2 teachers dead at Uvalde Elementary School 2 years ago. The victim's family have filed the legal action against FedEx and UPS. They accuse the companies of multiple oversights when the weapons were shipped to the shooter. FedEx is accused of shipping the AR-15 style rifle to the shooter, which used that in his rampage, and delivering it to a gun store. The carrier is also accused of not verifying the buyer's age. The lawsuit also claims that UPS aided in the illegal sale of a trigger system, saying it failed to screen the package before it was sent. The families are seeking unspecified damages from both companies. UPS, in a statement, says the lawsuit has no merit, according to USA Today. FedEx said that it is committed to the lawful delivery of regulated items in its networks. Okay, let's talk about homes here. The hidden costs of home ownership are rising rapidly to an average of $18,000 per year. And all this according to a new Bankrate study. Let's now go to NTD's Sean Marshall, who takes a look at some of these costs.
The average annual cost of owning and maintaining a single-family home in the U.S. is now up to $18,000 a year, 26% higher now compared to 4 years ago, according to a new Bankrate study.
It's no secret interest rates are high, so that makes your payment higher, but there's other costs too. Insurance has skyrocketed. Lots of people are reporting their insurance renewals at 40 or 60 or even 100% higher than before. Electricity, everything's going up.
Hidden costs of property taxes, insurance, maintenance, and other expenses can range from $11,500 a year in Kentucky to $29,000 a year in Hawaii for a typical single-family home. There are some things that can be done about managing expenses and budgeting.
Most of us, if we go through our auto pays, there's a few things that we signed up for that we could get rid of today. And also in some areas, you can shop for utilities, and that can make a big difference.
States like California, Hawaii, and New Jersey are among some of the most expensive. Single-family homeowners there pay more than $25,000 a year in ownership and maintenance costs. On the other hand, states with the lowest cost of owning and maintaining include Arkansas, Kentucky, and Mississippi.
One of the best things to do is preventative maintenance. Dollar for dollar, money spent on preventative maintenance has some of the best return on investment of anything someone can do in a household.
Buying a home has also gotten more expensive in the past 4 years. Home prices are up 40% since the beginning of the pandemic. In March 2020, the median price of an existing home was $280,700. This is according to the National Association of Realtors. By March 2024, that number has gone up to $393,500. Sean Marshall, NTD News.
Now, here's something interesting that's happening right now. Empty toy shelves does not equal happy children, but perhaps happy adults. And the reason here is, for the first time ever, adults have been buying more toys for themselves than any other age group. So this is what a new report from market research firm Circana says. Researchers are saying that consumers 18 years of age and older spent $1.5 billion in toy-related purchases from January through April. And those buys make adults the most important age group for the toy industry. Now, if we remember, this was an honor formerly held by 3 to 5-year-olds. Now, let's talk about what kind of toys adults are buying. The report says that, for example, trading cards, Lego sets, and sports toys were among the most sought after. And the reason for adults flocking to stores to pick up their favorite toy? Well, the study credits the COVID-19 pandemic, saying that adults wanted to reconnect with the toys that made them happy as kids during that time. All right, that is all the stories we have for you today. Thank you very much for watching. And of course, if you have any feedback for the episode, please feel free to let me know. Don't hesitate. You can email us at business@ntd.com or leave a comment online. I do read them for every episode. And we'll be back here tomorrow. In the meantime, have a good night.